Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates. It's Thursday, the last one for the week here on AusBiz. Hope you've been enjoying the content that we have been producing this week. It's been a week full of experts, and that continues today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. Really looking forward to this episode. It's been good to be back this week with our new background.
Yes, loving it.
Yeah. So, let's get stuck into today's episode.
So it is an absolute pleasure to welcome to the show today to discuss ESG investing, Adam Verwey. Adam, welcome.
Great, good to be here and excellent background.
Thank you for pointing it out. We're quite happy with it. But that is not what we're here to discuss today, Adam. For those of you who haven't come across Adam before, he is the founder and managing director of Future Super, Australia's first 100% fossil fuel-free superannuation fund. We have had the pleasure of having Adam on the show a couple of times to go a bit deeper on ESG investing, so make sure you go and check that out if you can. But today we're going to be going through the current state of the ESG market, having a look at some of the stocks, in particular Woolies and Tesla, and if we get time, chatting about climate investing. But Adam, let's start at the top. Future Super has become obviously synonymous with the rise of sustainable investing here in Australia, so kudos to that. What is the current state in your eyes of the sustainable investing space at the moment?
It's been a huge rate of growth over the last few years in particular. And I think that growth is speeding up rather than slowing down. If we look at super funds, the average ethical investment super fund is growing twice as fast as the average non-ethical fund. And then Future Super itself is growing at a rate 2.5 times faster than that. And even with that growth, there's a whole lot more to come. Research from RIA, from Choice, shows that 53% of Australians are currently planning to switch to a super or investments that are ethically invested over the next 1 to 5 years. So while it's already a fast-growing space, there's so much more room for it to move. And I think one of the other big changes we're seeing is that there's these big fund managers and super funds that are reacting to this consumer demand and are changing their investment strategies to include more ESG or ethical criteria. And I think climate change in particular is one where we're seeing a lot of movement. And even in the last year, the amount of super funds that have signed up to net carbon zero portfolios and strategies has been huge.
Yeah, Adam, we can attest that the interest in the ethical investing space has just exploded in the Equity Mates community. So many conversations about it. One particular topic that got a lot of conversation was recently BetaShares took Tesla out of their global ethical ETF, which raised a few eyebrows, got a bit of conversation going. A few people may know that Future Super works with BetaShares on that ETF. Now, correct me if I'm wrong, but I believe that is the case. So can you take us into the room and sort of explain the thinking around Tesla and why it was taken out of that ETF?
Yeah. And so to explain the relationship we have with BetaShares, BetaShares has a suite of ethical and sustainable ETFs, and Future Super is a contracted service provider to provide ethical screening and ESG services to those funds. And as a result of that, I also get to be a member of the Responsible Investment Committee at BetaShares, which is the committee that gets to make decisions about what falls in and out of the portfolios each year. And so the global ETF that BetaShares have, which is called EFI, which I think is by far one of the biggest global ethical funds on the ASX, has over $1.5 billion in it now. So that fund was updated in May. It had its annual reconstitution. So that's the time of the year when the companies in the MSCI World universe are rescreened and the ETF rules are applied. And that's when we see a bit of turnover in the stocks from year to year. And as part of that recent rebalance, Tesla dropped out of the ETF. And Tesla is a company that, as a responsible investment committee, we were talking about all the time. So Tesla is a company that is sort of synonymous with environmental investing, usually the sort of company that you expect to see in environmental and ethical portfolios. But it's also an exceptionally controversial company. So what we were finding is that when the Responsible Investment Committee was meeting every month to review the controversy reports within the fund, uh, every month we were seeing multiple controversies arising about Tesla. Um, some of them are small, some of them quite large and substantial. To give an example of some of these, they were accused of having forced Uyghur labor in their supply chain in China. They violated significant environmental laws in Germany and the US. And I think one that was particularly concerning for us was around Tesla workers in the US being forced to continue working against public health advice, resulting in hundreds of Tesla workers contracting COVID. And so I think over the 12-month period between rebalances, we're seeing Tesla repeatedly come up, linked to highly controversial activities, and we're also seeing them not really taking any proactive steps to address these issues or to engage with funds. So BetaShares, through its Responsible Investment Committee, was attempting every month to try and engage with Tesla to address some of these concerns and just getting no response. So I think at some point, ethical investors and ethical managed funds have to make a decision whether, even if a company has historically had products that might be seen to be environmentally or socially good, but are acting in a way that is not an ethical way, and they're not getting an engagement with those companies, they have to make a decision whether they continue to hold them or not. And the Responsible Investment Committee there decided unanimously that it wouldn't continue to hold Tesla beyond the latest rebalance.
Yeah, interesting. So Adam, there's no doubt that there are just more and more products coming to market, giving investors the opportunity to invest sustainably or with a lens that might suit how they approach ESG. And I guess with that is now coming a bit of criticism that it's just a marketing strategy and ESG investing doesn't necessarily affect change within the company. Are you able to give us some examples, though, of where ESG investing has resulted in companies making change through what you've been doing at Future Super or through what you have seen elsewhere in the market?
Yeah, I think so. The criticism feels a little bit unfair in some ways because ESG is a really big group of different types of investors, and not all of those investors are trying to create change. So if I think about traditionally what we used to call ethical investment funds, they were trying to create portfolios that match the ethics of their investors, and it was a question of ethics, not a question of trying to drive change, just trying to make people feel good about where their money was invested, or at the very least not feel bad about it. And then we have another group of investors who typically call themselves ESG investors, who aren't really trying to drive change at companies either. What they're trying to do is use ESG data to help make better financial decisions. So I think if you're one of those managers, you probably haven't gone out there claiming you're trying to make change. I think you're trying to either make a better ethical portfolio or trying to get outperformance through ESG data. But I think what has changed is that investors expect investment funds, and particularly super funds with the amount of money they have, to be much better stewards for the amount of money that they're managing. So superannuation funds in Australia currently have $3 trillion in them. That's projected to grow to $6 trillion by the year 2035. And I think the expectation is that super funds have so much money that they have so much influence about what type of country we live in, what sort of planet we live in, whether we're investing towards a livable planet, whether we're investing towards more inequality or less inequality. And the expectation of investors is that super funds and investment managers will be better stewards of their money with that, and we'll try to drive some sort of change. What that looks like sort of differs between different funds. I think the funds who are doing best at trying to deliver change are the ones who have a theory of change about how they create that. So, and I think one of the other pleasing things is there's a lot of tools that investors can use to help drive change. So one of those tools is engagement. and that's being used with differing degrees of success. But usually it's best for sort of incremental change. So if you want to make a little bit of change over time, particularly to areas of governance, engagement, voting at shareholder meetings, that sort of thing, can sort of make that slow change. And we've seen some pretty big wins in that engagement space lately. The big oil companies, Shell, Exxon, Chevron, all being pushed by shareholders recently to significantly reduce their carbon impacts or having climate change advocates added to their board. We also saw in Australia, Hester and some other super funds do a really good job with Rio Tinto after the destruction of Juukan Gorge, where they were able to hold some of the executives accountable for what happened there, and also introducing some new requirements for the assessment of cultural heritage sites. And it'll sort of be interesting to see what happens next time Rio Tinto has the rights to destroy cultural heritage sites, and whether it chooses not to, even when it might be profitable for them to do that. But I think one of the problems is that engagement sort of has its limitations. And I think it's important for investors to look to other tools as well. The tools of moving capital around, whether we make an investment or a divestment from an industry. I think we've seen huge change happen through the divestment movement, where many ethical investors are coming together and saying that there are some activities which are incompatible with a livable planet, as an example, and that we should be divesting from those companies and drying up access of capital to those companies. And we've seen that result in now over 200 global financial companies, whether they're fund managers, insurance companies, banks, now limiting funding to new coal projects, to new fossil fuel projects around the world. And we're seeing access to capital really dry up for those sorts of companies. And it makes it very hard for a new coal project to get funding or get insurance to operate. So that's sort of a driver of big change that's happening. And a lot of that is coming from the divestment movement, which, one, does limit capital, but also makes a really big difference to the social license of companies. If you lose your social license of a company, then it makes it very hard to operate, get access to capital, makes it hard to fight regulators and say that you have the social license to operate, to continue doing what you're doing. So I think we're seeing some really big wins there, and expect to see more over the next couple of years.
Now, Adam, you mentioned the divestment movement and the push to get money out of oil and gas, and that's obviously tied to probably the biggest concern of most ethical investors at the moment, probably most people at the moment, and definitely a core concern of future super, which is climate change. So if we narrow the scope from ESG investing generally to climate change investing specifically, what are some of the big trends, or what's the state of that market at the moment? And I guess the final question is there anything that retail investors like Bryce and I can do if we want to participate in this climate change investing movement?
Yeah. So I think what we're seeing is, one, I think we're really at the start of divestment really ramping up. We've seen so many divestment announcements already. We've seen even huge fund managers like BlackRock start to divest their active portfolios from coal in particular. But as more investors start to make net zero commitments, carbon commitments, they're going to have to meet those commitments, start really selling down their exposure to fossil fuel companies. So between now and 2030, the fund holdings of super funds and other large global pension funds around the world who've made a net carbon zero commitment, their first step in doing that is getting rid of those big oil companies, the big coal companies, the pure play fossil fuel companies. So I think we're going to see the amount of investors willing to buy those stocks really dry up, and that's going to have follow-on effects as well. So I think that's one thing we're about to see on the divestment side. I think on the investment side, in order to meet those net carbon zero commitments as well, we need to see a huge amount of investment into all sorts of different climate opportunities. So some of that is on supplying the renewable energy needed, supplying the renewable energy infrastructure, the electricity infrastructure to support a clean energy future. We're also seeing really great opportunities in terms of reducing carbon footprints, either through different ways of working, different ways of traveling. So I think there's going to be a lot of opportunities across those all those different areas. Food is another one. Low impact, low carbon impact food supply is a great opportunity as well. So I think what we're doing at Future Super is looking at how do we, rather than try to pick winners amongst, but how do we spread ourselves out across all the different opportunities that are available and try and give importance to sort of energy reduction, carbon reduction, as much as we are looking at the opportunities in solar and wind. One of the things that we've recently invested in, which retail investors can invest in as well, is a product that's been launched by BetaShares, which is called Earth, which is a climate change opportunities ETF. So that forms a part of what we call our Renewables Plus investment option at Future Super. So that's something where you can invest in the different climate change opportunities that are happening globally through a suite of about 100 different companies operating in that area. There's companies in there that you would expect to see, like renewable energy companies, but there's also companies like Zoom, for example, that are out there helping us change the way we work to have a lower carbon impact for our working.
So Adam, unfortunately we have run out of time, but very quickly, I can't pass up the opportunity to get your thoughts on Woolworths. Last time we spoke, I think Ren put it to you, is Woolworths an ethical company? And obviously given their relationship with liquor and gaming, it was a hard no, but now with the divestment or demerger of Endeavour Group, they're looking like a pretty rosy company to me. But in 30 seconds or less, will we see a Woolworths now in the Future Super portfolio, what's your current thoughts on Woolworths?
So we're not rushing out to buy Woolworths. So we'll assess them in a couple of months' time when we do our regular assessment of all the ASX companies. But my suspicion is that there's other issues, even though they've moved out a number of their business units that were very problematic. Their gambling units, some of their alcohol. I think there's still a number of issues with Woolworths that I think are likely to make it not appear in Future Super's portfolio anytime soon.
No, fair enough. And just like we have been discussing many times on the show over the last sort of 12 months when it comes to screening for these sorts of companies, there are plenty of ways in which you can do it. So I have no doubt that yours is a lot more detailed than whether or not they're involved in liquor or gambling. So thank you so much for coming on the show. We must get you on the podcast at some point soon to continue this discussion around ESG, because it is always an important part of the conversation for the Equity Mates community at the moment. So thank you very much, and we'll talk soon, Adam.
Great, thanks for having me on.
And that brings us to the end of AusBiz for the week. As always, we hope that there was some value for you in the content that we've done this week. Always a lot to discuss about ESG. So if you have any questions, you can hit us up at contact@equitymates.com. We've got the website, equitymates.com. I would give out Ren's private mobile number, but I don't think he would like that. So.
I don't even think you have it. You have my work number.
I don't even know it. But anyway, Ren, we're back next week.
Yep. Hope everyone is getting through lockdown. If you're in Sydney or anywhere else that's locked down, but have a good weekend, and we'll see you next week. Thanks for watching.
Equity Mates, from our mates at Spaceship. Investing made easy.